And we're live. Hello and welcome to the 185th episode of Hex Therapy Live. I'm your host, Maddy, ALLin, and I've got a great show for you tonight. So go ahead and hit the like and subscribe button, share this out. We're going to be just talking about, in general, how to get more outreach, how to keep the community going strong. And I've got my OG of OGs Hex intro to reintroduce. So welcome to Hex Therapy Live. So as you can see from the intro, having a Hex badge was an idea from all the way back in 2020 that didn't get executed until what? Late 23, early 24? Yeah, I guess it was until the Godwell and everybody else in the community and Twitter all got together. Elon Musk freed Twitter from being negative towards crypto, and boom, we got we got history in the making. So that was the original Hex Therapy Live uh, intro before Richard Hart, had given his endorsement of, I guess, my therapy vibes. And now here we are today in 2024. So shout out to everybody who's watching. Plenty of people watching and commenting live. And then we have thousands watching on the replay usually. So shout out to everybody who's been making Hex content lately. I see you out there, Crispy Man. You got, and he's on hexfire.io. You got Crypto 7. You got the Game Theory Gang. You got all these different groups, 9 Inch, Randy Hilarski. Lots of people have been out here making content. I saw the Moon Gang was back. So that's Charlie and Miguel. You have Crypto 7, who of course not only does a daily live stream now from the UK, but he does a weekly spot with Tangent that's always one to catch. You have What the Hex with Papa B. You have your friend Sami on YouTube, and then shout out to DeFi Crypto Alliance with Corey Geary. Another great show. And of course, Westcott Crypto has his show going, adding commentary to the mix. And yeah, those are just the ones I've been watching in the past few days. So shout out to everybody, whether I shouted you out or not. Lots of YouTubers here in the space, and lots of people creating content that people want to watch. So let's see. We had the Fed, the Federal Reserve, yesterday decided to hold interest rates steady, which was somewhat predicted by the market, but somewhat not predicted in the sense that people were thinking that they were going to cut rates. Interest rates, they were raised faster than ever before in U.S. history in the past year and a half. And so because a lot of banks are breaking under the fact that they have poor bond holdings that put them out of the money on their bonds, that has, led to all these leaks in the U.S. financial system, all the bad plumbing that's going on. And so, the Federal Reserve, they do financial theater and political theater to try to, supposedly their mandate is to create zero unemployment and only 2 to 3% inflation. Of course, they, in the past couple of months, they deleted coffee off the list of things that gets to count towards inflation because the price of coffee was going up too much. So they cook the numbers more than a master chef, and yeah, so it's always fun to see what they're pretending. But it certainly does matter whatever the Federal Reserve does in terms of how much money they print, and we've seen in recent years that not only comes in the form of monetary expansion, but it also comes in the form of these weird derivative loans that they give to banks and promises to buy back their bonds for whatever was paid for them, which is, that's part of the problem that created the 2008 crisis, right? So, but at the end of the day, I think the macro situation that we're looking at, with rates unchanged, that means that in 2 months, we would be greatly expecting a rate cut. And then the market always dips hard and then pumps to much greater all-time highs in stocks, crypto, etc., houses, anything of value. You're going to see used cars go up. Um, anything that people can get their hands on as a store of value goes up when they're printing money you know, because of lower interest rates or because of the next financial crisis that they have to print their way out of. So, yeah, we've got like a major development this week. That's like the biggest financial news of the week is the Federal Reserve leaving the interest rates unchanged. And of course, we're also looking at the key date of the US election happening in November as part of the macro cycle that's unfolding here for crypto and for stocks. Of course, stocks are at all-time highs, not because the top 1,000 companies are profitable, but because the top 7 companies keep, they're like a black hole for people's money. It's, what is it? NVIDIA, right? Apple, Microsoft, Google, um, Facebook, all these top 7 companies in the stock market. That's what's driving the new all-time highs. And so that's kind of interesting to see um, a different type of bull run that you've ever seen, a different type of all-time high. Normally, it would be distributed in at least the top 20 companies, if not the top 500. But today, over half of the S&P 500 companies are zombie corporations that don't turn a profit. So, yeah, okay. Somebody commented here 185 consecutive streams of crypto alpha. Thanks for tuning in. Performance percent of assets connected to this alpha over 185 streams. Great question. So when I started my YouTube channel 3.5 years ago, the price of Hex was a third of a penny to about half of a penny. And it, of course, went up to 55 cents. And so that's, a third of a penny to 3 cents is a 10x, and then to 30 cents is 100x. And then you're a little bit higher than that. So about 150x to the top. And that was over a period of about a year, maybe more than that. So not too long, right? But not too short. And then yeah, the price of Hex has gone all the way back down. I would say now it's maybe at 6/10 of a penny. So if you go from my first stream, you've still doubled your money. But a lot of people, they were laddering, and so they had some coming out every year for 15 years. And so, yeah, the people who bought only at 55 cents, they're hurting super hard right now. But everybody else has decided whether they're playing a long-term or a short-term game, and they've you know, suffered or been rewarded accordingly. Um, Hex went to 55 cents. Yeah, it did. Will Hex go to an all-time high? Again, it's unknown. Some cryptos come back, like Ethereum and Bitcoin and lots of other ones, and then some just fade into obscurity. I would say my guess is that uh, the inflation in Hex will have it bottom somewhere, and maybe we've already gotten there, maybe we haven't. But at the end of the day, having so many content creators having 200, it was 240 people who got on stream for the Hex conference for the world record. So that's, I mean, that's a promising thing when that many people have time locked and they've made a commitment to stick around. So yeah, no guarantees, but definitely a strong community, unlike any other in crypto. Thank you for your service. My pleasure. Cool. What's up, Groovin? Good to see you there. When RH returns, maybe interest will grow again. Ah, good pun. Not sure if you meant it that way, but yeah. So I mean, the macro, at least in crypto, in the 4 year cycle, this is our kind of like the fourth Bitcoin 4 year cycle, and typically that follows the election pattern in the US. And so whoever started Bitcoin started it on a 4 year cycle to have be disinflationary, have the supply cut in half every 4 years around the time of an election. And yeah, so far in the past 3 cycles, that's created a huge boom right around the time of the election. And so you would expect crypto to probably top out at the end of next year. So maybe October or November of 2025. And so, um, you know, the lows have been put in at the same spot in the past 3 cycles on this 4 year pattern. And so if the highs, and the meme is this time is different. So uh, we don't know with only 3 data points if this time will be different or not, but everybody since the first cycle has been saying this time is different. And so the joke is that it's probably not going to be different this time, but lots of people, as always, will predict that it will be. And they'll try to sell you some new story. And sometimes those narratives really take off, like AI in gaming, metaverse, maybe not so much. Meme coins, definitely a strong narrative. Um, DeFi was a narrative of 2021. Yeah. So lots of good things happening in the space. Lots of good things happening in the macro. You're still going to see choppy seas for crypto because it's such a risk on asset. But it's interesting how even a crisis, financially or otherwise, in the US, that would be bullish for risk on assets because the government officials just keep printing money and they want every excuse they can get. So whether it's them creating the crisis or it being created by the free market or something else, natural disaster, really anything, um, is an excuse for the government to print money. So, um, so that's bullish in the boom and bust cycle and the boom part. So that's kind of what we've seen this week. This week kind of set us up for the fact that the Federal Reserve is meeting every 2 months. And they just met and they said not to raise interest rates. And so you'd expect if they are so corrupt that they want the election cycle to look good, they will find a reason to pump up the economy before November. And that's why we expect this boom to be happening in between this coming November, this fall, and the following fall. Usually that lasts about a year of elevating prices and whatnot. And you've seen under both. I mean, you've seen under both President Trump and President Biden, they've both had very free financial policy. They've spent more than their predecessor by multiple times, whether it was 2 times more or 3 times more. These guys are the same when it comes to debasing the currency. So in that regard, one might be more hostile towards crypto or trying to like shut down innovation, and maybe the other one not so much. But we don't even I don't know that we even know who's going to be running in the Democrats if once we get past the debate next month. I think it's later. Is it later this month or next month that there's supposed to be a debate? So a lot of people are predicting that the Democrats will put forth a new candidate at that time, which is, that's going to be something that the market will react to. But you know, unless it's Elizabeth Warren that they're putting in as president, um, you know, as their candidate, I don't think it could get much worse for crypto than what we already have. So, and we've seen even the judicial branch decide that the last 4 out of 5 crypto cases were not, uh, won by the government, not won by the SEC. And in particular, the SEC, I mean, even outside of that count of 5 cases, they've been fined and reprimanded by by the federal judiciary system. And it's interesting because people who deep dive into this stuff say that the leadership hasn't changed. And so the people who are getting fired at the SEC for what judges are saying is arbitrary and capricious behavior, just from the start. I mean, that's like the most accusatory thing a judge could say, other than you're fined millions of dollars. But they've been saying all that stuff, including the you're fined millions of dollars for misconduct. So, um, yeah, so I mean, at least we have some checks and balances working here, but that doesn't really create the most nurturing environment for companies to do their best work and to invent, better forms of technology. So, yeah, real interesting what we're seeing when we zoom out in the crypto scene, all that good kind of stuff. Okay, Jerry is commenting here that the first presidential debate is Thursday, June 27th at 9 p.m. Eastern. So that's 8 p.m. Central. So it's about this time when we would be wrapping up a short episode of Hex Therapy Live. And the 27th, that must be 2 weeks away from today. Definitely coming out. Can you please talk more often about the Maddy token? I would like to hear the game plan theory on it. Well, it's kind of funny when we brought it up on Tuesday night. I was saying that I would maybe be able to speak more about the future plans once people started to understand what has already happened with the Maddy token. There are lots of people on Twitter, some of whom like launched their own tokens to even criticize, um, me using my free speech to talk about Maddy token and what had been done to add liquidity to something that wasn't even created by me in the first place. So yeah, I think when people go back and they look at the episode from last week on Thursday, that's a really good. No, I'm sorry, it's from 2 weeks ago on Thursday. That's a really good sample point of like what the intricacies are of the experiment. I would say most notably, and I've also tweeted about this. Yeah, let's just go to the tweet because that's where I really put in the most thought into how to communicate that. Right, because there's no expectations, and people know I like promoting delayed gratification, and nobody knows if there's a connection with Time Pays Me as a tool for people to delay gratification and undo a hack and pay yourself to it's basically self-pay for self-improvement, using the blockchain and using your own savings. Yeah, so let me bring up my banger tweet. Got like some ridiculous amount of views. I was talking about a lot of different things. Here we go. Yeah, this was 28,000 views on Twitter. And in the this was the longest tweet that is allowed even on paid. So I won't read the whole thing. I was talking about like what it means that RH isn't live streaming and what it means that like Hex on Ethereum wasn't the end all be all because of like the gas updates that had happened on Ethereum. Some speculation about what Richard's master plan is, and let's see. Then I went into something about kind of in between Hex and RH tokens, and where I discussed Maddy token. I'm talking about how waiting sucks, delaying gratification, when done properly to the right magnitude, can punch a hole in your stomach. FOMO and FUD are scum. Emotions are dumb. No one is perfect. Always take care of and love yourself, even when making mistakes. Esteem yourself. Practice what you preach by learning better self-care, and you will succeed. Ask for help and help others. And then I said, on another note, I've never launched a token. I've never rug pulled anybody. I'm not broke. I can see all the funds on chain from the Maddy token that Gary launched. There was 88K of LP added, and that was 14 days prior to this tweet. It looks like the address that has all the Maddy has never sold a Maddy token. That's kind of mirrors what happens, what we can see in Hex. And then it says a medium amount of LP was set aside to a no expectations address, actually two. The first address is a V3 sell wall that protects the meme of not going above $20. And it says see original tweets. And then the second no expectations address is a stack of PLSX that just sits there. And no money has been extracted except by the traders who aren't me. No one got advanced notice that the LP was being added, or that I would talk about it. And essentially a dead token was taken. Traders made it fly. And that's interesting because it was impossible for bots to snipe, which has been a major problem of many launches, including the Ben token, or Bro token, as it's called. So, the market participants continue to get smarter when people like me and Crispy Man and Solid Hex and Axis Live and other people come along, and we actually do our own research. We actually educate our audiences instead of exploiting the audience, right? Because there are a lot of things that could have been done with Maddy token that would have been unethical, that other tokens do all the time. The majority of tokens have founders that sell. If you look at the top 20 cryptos, it's all of them, like Ethereum. Everything except Bitcoin and Hex, I would say, are known to be dumped by their founders, which, you can make a business case that that's fair game, but it brings up more questions than these experiments that have not needed to dump or not needed to profit and have let the market decide what the value of these things should be. So I also, and then this is a really important point. If Hex had never gone to 55 cents in 2021, but it had topped only at 5 cents, then people would be less butthurt today. And I believe we would be much higher because of reflexivity and network effects. You wouldn't have people complaining about only a 1000x compared to a 10,000x. And people would have sacrificed, critically, people would have sacrificed 10 times less if Hex hadn't gone 10,000x, but only 1000x. And PLS and PLSX would be 10 times more scarce and would be a 10 times higher if if the reflexivity held up. So um, I still focus on Hex, Pulse, PulseX, and Ink, but you know, being able to do these experiments and to be transparent and to figure out how to get around bot attacks and that kind of thing, that's that's in the game. So then I made some general comments about how the community can get along and continue to scale and celebrate the fact that we have diverse opinions. But yeah, it's like for most people who create a crypto, I would ask, what's in it for you? And if you don't like the answer, then you shouldn't trade it. For the Hex and Pulse Chain, I believe what's in it for the founder is um, something more than money. He's not interested in selling, and that's what the 4-year track record has shown. So that's very rare. Why do you think RH chose to do the whole Pulse Chain thing instead of just releasing a fixed Hex contract on Ethereum? Is Ethereum too centralized or something? Not sure. We haven't asked him that yet, and he does not speak to the public these days, so we don't know. Maybe he'll tweet about it someday. Maddy, can you please pump Maddy? No, that's not the point. And you've seen the price go from $1 to $10, back down to $2, and was it? I think the all-time low is 88 cents, and then it went to $1.80 the next day. So yeah, it's traders are doing their thing there, and even without me mentioning it, I believe that maybe there were 5 or 10 days where I didn't mention it. So yeah, it's not my job, and if you're holding it or you want people to know about it, then go fire up your YouTube channel. That's what happened with Hex. Outrage marketing. Well, here, I can explain the outrage marketing. Too many people were buying Hex way above 5 cents. So, um, you know, did you want people buying Hex at $5? Probably not. So something had to to slow down the adoption. Hex is a different community. It's hard to explain. Excellent observation. Um, you said, I still like RH, but I think the personality was a mistake. Yep. Cool. Well, there we are. We're about 30 minutes in, and you've heard the macro take, which I think is probably the most important thing affecting the financial markets. The stock market and crypto, however much they want to be different from each other, they're both risk on assets, and they both are correlated to the upside and to the downside. Crypto is leverage on risk, and so um, different cryptos based on their liquidity bonding have a different amount of leverage risk, and leverage is something that has to be applied with full knowledge. You don't have any guarantees in that case. Although you can study the liquidity bonding in order to understand what the relative performance can be. So let me give you an example of that before we shut down the episode. So go look at Pulse, PulseX, and incentive token, and look at how much bonding they have to tokens that are bigger than them. We're not going to count the Tangang tokens because they play like pseudo fake liquidity games with them inventing two tokens at the same time that then nobody has a large supply of to sell. So it looks like you have a large amount of liquidity. If I made ALLin token, which I won't, and then I paired it with Maddy, Maddy has a market cap of $250 million. That doesn't mean that it's redeemable for that. So, yeah, so if we count only the like quote unquote true liquidity that has liquidity tied to dollars in a bank account, eventually, stable coins, that sort of thing, Bitcoin, Ethereum, USDC, we can see that there's a greater amount of liquidity between external assets of value and Pulse Chain. There's more liquidity. And then there's relatively less with PulseX, and there's relatively less with Inc. still yet. And so what you see is that when Ethereum goes up 2%, Pulse Chain goes up maybe 5%, and PulseX goes up 7 or 10%, and Inc. goes up 10 or 13%. And the reason for that is because the market is arbitraging, the market is spreading out the buy order between things that are exchangeable in a decentralized smart contract called a DEX. So what does that tell you? So knowing the ratio of how many millions of dollars are paired between Pulse and PulseX and Inc. tells you that if the price of crypto in general goes up, you'll make the most by buying Inc. You'll make more by buying PulseX, and you'll make more with PulseX compared to just Pulse. You'll make more with Pulse compared to Ethereum. So that's the example of leverage. And so conversely, if the value of all crypto goes down, then you would expect that Inc. would be the worst performing, PulseX would be the second worst performing, and Pulse would be worse performing than Ethereum. Now, if you have whales moving around the price, then that balances it out. But they're pushing against the tides of the exchangeability and liquidity of these different assets, relatively speaking. So that's really fun to keep in mind when you're looking at the potentially bullish but rocky road ahead. And so, different people will be comfortable taking different amounts of risk based on age and income and that kind of stuff. So there's another cool thing that you get to learn here on Hex Therapy Live. At the end of the day, I'm saying PLS for the win. Shout out to everybody dropping comments. Cool. So yeah, keep dropping comments, on the replay or in the live stream here as you catch up. It says we have 290 people watching, 63 on YouTube. And I think I saw some other content creators going live at this time too. So for me, this is Maddy ALLin signing out of episode 185, continuous streak of 185 weeks of Hex Therapy Live. Until next time, stay wisely, my friends, and peace out.